Welcome back. You're watching Business Morning on Channels Television. Join the conversation online, or you can send us your thoughts or comments to any of our social media platforms. Let me just quickly remind you, on Twitter, we're at BizMorning, or you can tweet at Channels TV. We'll also be glad to hear your comments get your comments via email, so you can send it to businessmorning@channelstv.com. But you can also tweet at me. I'm at CTV Harriet, and at Bibos, and be glad to mind your business. Let's get the conversation going. And right now, we're talking about commodities, talking particularly about Agric Commodities, and Okwemi Oguntade, a senior research analyst with senior research economic analyst with financial derivatives company, joins me now on the program. Good morning to you, Okwemi. It's great to have you join me on the program.
Good morning, Harriet.
So let's do a little bit of a backward and then coming forward. On Tuesday, when we were on the program, we talked about expectations of the CBN BDC's meeting, which I forgot to actually mention, actually happened yesterday. We actually had tabs on it. We were supposed to get the president of the association on the program to talk about some of the resolutions that were reached at that particular meeting. And it's still a little bit it's still not clear what exactly happened at that meeting. But for you, and judging by how the prices have been and how manufacturers are looking forward to the outcome of that meeting, how would you say the market is shaping up at the moment? What are the key issues that were highlighted, including the forex issues that were highlighted in FDC's report today?
Okay, so starting off with the forex issue, we know that yesterday there was the BDCs came out to say they would prefer if they gave a rate of 399 naira to the dollar. Now, while this is a huge jump from what it currently is,
but this was before the meeting, was it?
Yeah, it was before the meeting. And while this was a huge jump from what is currently trading at the market, there's still a huge spread between, at that rate, there's still a huge spread between the parallel market rate and the official rate. We're looking at about 100 naira to a dollar. And that still gives room for arbitrage. So I think at the end of the day, I'm hoping that once the minute of this meeting comes out, discussing how to harmonize rates isn't really going to take us anywhere. We've seen that intervention and trying to fix rates hasn't done anything for us. The main problem here is liquidity problems, working on the supply of dollars. So once we can get that sorted, then the market is efficient and it would work its way out to the correct, to the fair value of the naira. Other issues that we've also seen in the market or in Nigeria is the fact that the federal government has decided to issue a diaspora bond in March, about $300 million. Looking at this seems like the federal government isn't so optimistic about subscription, because as at October last year, they came out saying, we're going to issue $21 billion diaspora bond, and then coming this year to say, no, we're switching over to 300 million. That's like, that's 69, 70 times below what they initially said. So we're looking to see what the modalities of this bond would be, at what rates they would offer it. Then coming to the energy market, we're saying that all workers have suspended their 3-day strike. Action where they are being suspended, not called off. We're hoping they would probably go for calling off, because Nigeria can't really afford to have a strike at this point. We can't afford to have scarcity. We've seen scarcity in kerosene in recent times, and we've seen that kerosene went as high as 400 naira to a litre. But the NNPC has come out to say, look, our refineries are back in operations. The Kaduna refinery is going to be producing at least about 2 million litres of kerosene a day and 3 million litres of automated gasoline, that's diesel, a day. So I think coming from that angle, supply is definitely going to improve in the market, and that's good news for the energy market. But at the end of the day, we still have to look at the exchange rate issues of imported refined crude, and we're still waiting to see what's going to happen in the market.
But then you see, prices of agriculture, agri commodities have remained largely unchanged since the beginning of the year, and judging by this news of having the suspension by Nupeng, and seeing that diesel prices have still not dropped, it's still as high, and a little bit of transport issues here and there, one would have expected that this might not really have affected prices. So what really is responsible for the change that we're seeing with agri commodities?
I think in the market right now, it all boils down to the consumer resistance traders are receiving in the market. They can't afford to really increase price, because increasing price would lead to a decrease in demand. And then also we have to consider the fact that, the festive season is over, so nobody's really buying anything at this point. Everybody's stocked up for the Christmas, for the festive season, and at this point there's really no demand in the market. And looking at, you mentioned transportation costs. So for transportation costs, we've seen that diesel prices have gone up to about 260, and we know diesel is what most of these huge trucks use in terms of transportation. But that hasn't filtered into commodity prices yet. And in coming weeks, I doubt if it would, because looking at our inflation report, we've projected that inflation is going to slow to 18.3%, and this is largely because of base year effects. Like we mentioned, the rate at which prices are changing are kind of slowing relative to last year. So I really don't see how that's going to...
Not Nigeria's appetite for imported food items, because that seems to always, come in slightly higher every month.
Well, yes. At the end of the day, it's very difficult for a consumer to switch preferences unless you're brought down to, brought down to a very difficult level where you really have no choice but to. But then once you're used to a certain quality of product, I think I was watching channels. I was watching one of, the business morning sessions the other day, and one of the guests on the show was talking about the quality of Nigerian products, and he made a joke. He was like, you get a Nigerian toothpick and you can't even pick anything because it's just it's just too big. So at the end of the day, it's all about quality of the product. So you'll probably still see Nigerians moving or having preference towards imported goods until when we see a significant improvement in quality.
What about cocoa? Now, some farmers are asking the government to reduce interest rates on loans to make it, make their business more profitable, make it easier for them to access this finance. Does it seem like this is what it's needed at this time, not just for cocoa farmers, but for the entire agri sector?
Yes, definitely. I mean, the government has actually been playing a significant role in that sector. There's an Anchorage program where they're offering single-digit interest rates to the farmers, and I think that in itself it's kind of enough support for the cocoa farmers. Asking for lower rates, I'm not too sure how that would work out, but I think single digits, it's a brilliant idea for them, and it's a significant development in that sector.
Most of them have always complained that when they do go to try to access this facilities, the collateral that they're required to put forward is always more than they can afford to give. And so that also has been asked, they've asked that the government should look into this and try to make requirements to access these funds a little more less stringent.
Well, in recent times, I know one of the policies that the government has come up with is trying to link the small to medium processors with the farmers. So I think if the small to medium processors and the farmers are linked together in terms of collateral, they could provide with the processors. Obviously, they have to get machineries and they have to get factories, and those processors in those positions would definitely have the collateral to back up the loan that they are requesting for. So if there can be some kind of convergence between or cooperation between the small-scale farmers and the processors, then I really think that would be sorted out in terms of collateral.
Okay, so we're moving into the second weekend for the year, for the first month of the year, and of course everybody is looking to get themselves ready for the weekend, go to the market to buy products and stuff like that. Just give us your outlook for the market for this weekend coming, and of course up to the next time we have conversations.
Okay, so far we've seen rice and beans has declined, and in the coming weeks we expect other commodities to also decline. We're expecting commodities like plantain to come down as well. But for palm oil is probably still going to remain at high levels, and this is largely because of a supply deficit. There are also import restrictions, so we have to stick with what's being locally produced, and that's not enough to meet demand. So palm oil is one commodity that we don't see coming down anytime soon. But for other seasonal commodities like tomatoes, like pepper, like rice, like beans, we expect them to come down further in the coming weeks.
When you say you expect commodities to decline, I always wonder, are you expecting that there will be an oversupply to the market at a particular product? Maybe the rice, for instance. You said the rice had come down to about 19,000 naira here in Lagos. So to ensure that those prices actually stay that way, do you expect to see flooding in the market of these commodities, rice, beans, gari, palm oil, for instance?
Well, indirectly, yes. The reason why I'm expecting prices to come down is because of a lower demand, and because there's a lower demand, then you have excess supply. So that's what I mean by prices are expected to come down, because people aren't purchasing as much anymore. The reason why we saw prices going up in December was because there was a surge in demand, and now that that demand factor is no longer there.
Is it that people are not eating as much anymore?
No, they've already stocked up. They stocked up for Christmas. I mean, it will probably take you, I don't know how long it will take you to finish a 50 kg bag of rice, but I'm pretty sure it wouldn't, it wouldn't take 30 days. You probably still have it for maybe 60 to 90 days before you could finish up a bag of rice.
But you'd be very surprised, especially for households that are really big. 50 kg bag of rice is not, it doesn't go very far.
Go far.
No, it's not. But thank you so much, Okwemi, for coming on the program this morning. Okwemi Gutade is a Senior Economic Research Analyst with Financial Derivatives Company.